Hello. So today we're going to see Ind AS 116 leases. The standard set out the principles for the recognition, measurement, presentation, and disclosure of lease. So the lease we need to recognize where in the books of account measure to be measured accurately, then presented where in the financial statement correctly, and disclose everything properly as per the condition to the users. So these are the things regarding the leases. We're going to see these four sections. Objective is to ensure that leases and leaser provide relevant information in a manner that is faithful, represents the transaction. Faithfully, it's representing the transaction. It is not saying something irrelevant. It is saying everything that is relevant. And the information gives on the basis of a user's financial statement to assess the effect of lease have on financial position, financial performance, and cash flow of the entity. So how this lease affect the financial position, whether the lease is asset or liability, financial performance of this using this lease, whether our performance has increased, whether our opportunity cost has increased, or there is a problem, or there is an asset or liability of this lease, and cash flow. Is it the monthly the cash flow is you have a equitable payment, a monthly payment, a quarterly payment, how it is flowing through it, or whether this cash flow is eroding our asset. These are the things we need to see in leases. So, either from the disclosure, the data should be appearing to the user. So, that is the objective what they are saying. Scope. The scope and the standard applies to all leases, including leases of right of use of asset in a sublease. Sublease also this other thing. So, one person will get the lease, and from them we gain sublease. From the for them also this lease will apply. Lease to explore the mineral rights, oil, natural gas, similar non-regenerative sources. Lease will apply for this. Lease will apply for them. But this won't lease won't accept. This lease standard won't apply for them. The lease of biological asset, including scope of Ind AS 41 agriculture, health lease. There this lease won't apply. Service concession arrangement. The scope of Annexure D, service concession arrangement, Ind AS 115, revenue from contract with customer. There this lease won't apply. When lease with intellectual property granted by the leaser within the scope of Ind AS 115, revenue from contracts with customer. There this lease won't apply. Right held by the leasee under the licensing arrangement within the scope of Ind AS 38. Intangible asset which items are motion picture films, video recordings, play, manuscripts, patent and copyrights. Where the movie rights for them lease intangible asset lease won't apply. Lease may other than these 5 points lease will apply. So mineral rights, biological concession arrangement, intellectual property, and movie rights, intangible movie assets of motion movie rights. These five cases this lease concept won't apply. Lease may but not required to apply in the AS 116 lease of intangible asset other than the disruptive of point E. Okay. Other than the point E, but not required to apply the Ind AS 116 lease of intelligent property asset. That it will apply. The only in the case of motion pictures, video recordings, plays, and manuscripts, patents, and copyrights, it won't. A standard specific to the accounting for individual lease, however, and as practical expedite, the entity may apply a standard to portfolio of lease of similar characters of the entity. Reasonable expect that effect of accounting on portfolio basis on the financial state standards would not differ materially, but applying a standard to individual leases. So what they are saying, the entity may apply standard to portfolio of leases. All these leases can apply. The individual separate also they can apply. But it could be a financial lease or operational lease. You should differentiate it. That is very important point. Recognition exemption. In addition to the above scope of exclusion, a lease can elect not to apply to recognition, measurement, and presentation requirement of Ind AS 116 to short-term leases and low-value leases. So there's exemption to this lease. What they're saying, sir, the lease is very small, short term, or 1 month, 2 months. This is going to do. So there, I'm going to apply this lease standard 116. That's the question may arise now. In that case, it's very small amount of value. or a low short-term period, in that period, this lease won't even apply. That is what been said. If a lease, if a lease elected for remuneration, then it shall recognize a lease payment associated with those lease as an expense on either on a straight line basis or the lease term on another systematic basis if the basis is more representative of pattern of lease benefit. What they are saying, there is exemption is given. What kind of exemption is given? Either straight line basis or there is exemption. What kind of exemption is given? If a lease is considered as an remuneration or payment associated, the lease payment is associated with as a expense. How it is expense either on a straight line basis or over a lease term or another systematic basis. If that the basis of more representative of the pattern of the lease benefit. Okay. The election of short-term leases shall be made by the class of underlying asset. So we have a class of asset. So this election of short-term leases should be associated with it, in which a right of use of relates. Who uses the lease should be regulated. A low value lease exemption can be made on lease by lease basis. We list out all the leases. We will consider materiality and the low lease, small leases. We don't need to recognize as lease. Rather than it, we can charge it as expenses. Example, softwares which is used for a system. A lease payment will be given over 500, 300, 200 every month will be given. Rather considering as a lease payment, we can consider as expense. This is being said here. Lee shall assess the value of underlying asset based on the value of asset, then when it is new. The lease shall assess the value of the underlying asset based on the value of the asset when it is new. So we have an asset. We are getting the asset for a lease. So which asset to be considered as a value? Which value should be considered for the asset? The new getting the asset now, the newest value that is the fresh value without depreciation. Before depreciation. Assessment of whether an underlying asset is a low value is performed on the absolute basis. A lease of the low value asset qualify for exemption regardless whether the lease are material to the lease. So the low value asset, the example 5 years used asset is got for a lease. Now they don't have a materialistic value. Returned on after returned on depreciation, the value is very less. So on that asset we are taken as a lease. There is no rule to take as a lease asset. Whether exempted, we can book for expenses. Assessee is not affected by the size, nature of circumstance of the lease. The assessee never been affected by the size. So we got a big assets. We got in this circumstance. So this nature of asset is used. But how what is the age of the asset we should take into consideration? How big the asset is? What is the age of the asset? How much depreciation is being used? How old is this asset? That to be considered. Accordingly, different leases are expected to reach the same conclusion about whether the particular underlying asset is a low value. Example, low value underlying asset can include tablets, personal computers, small items, office furniture, and telephones. These are low value. So when you get an lease of an building with the furnitures, uh, this furnitures may be 5 years, 10 years old, but by the considering into the book of, we don't need to take them into the asset valuation because they are computer table, small thing. We don't need to consider it. That's what been said. If a lease subleases an asset, if a leasee sublease an asset, the exports to sublease an asset, the head lease does not qualify as a lease for low value asset. Even we get a asset in a sublease, but as a low value, we don't need to consider as an as lease asset in that case also. If an entity applies either exemption, it must disclose the fact and certain additional information to make an effect of exemption known to user of financial statement. So how this exemption we should say, sir, I have taken in this asset is very low. I have declared it as exemption. When you declared, you need to disclose it. Where you need to disclose in the financial information stating that this asset has exemption. So we have disclosed the fact, certain additional information, make the effort that, sir, users, see, we have taken this asset, this is exempted, this is low value. So we have booked as expenses. Such a way need to disclose in the notes to accounts. So lease, it's a contract, a part of contract that conveys a right to use an asset, underlying asset for a period of time in exchange of consideration. What you are giving me an asset for certain point of time, and so this is an asset to me. Why is asset to me? I have a right to use this asset. So what you get in exchange is a consideration or another asset. Right to use of asset. Now what asset that remain represent or lease is a right to use an underlying asset for the lease term. So for the period of this many time, I can use this underlying asset for my own purpose. I have the right to use. For that you will get a consideration. That is right to use. Lease term. What is lease term? A non-cancelable period in which leasing has a right to use underlying asset. Together both a period covers an option to extend the lease if the lease is reasonable, certain to exercise the option. Sir, for a period of time, the respective period, I have an unconditional to use the right, unconditional right to use the asset without any break in the period. Then is a lease term. The period covered by an option to terminate the lease if the lease is reasonable, certain, not exercise the option. Sir, for up to this period, you has a right to use the asset. It will be considered you accepted the lease when you take the machinery. You exercise the right. Until you exercise the right, there is a lease term. If you have not taken this use of asset for this term, there is no lease term. But also it considers a lease term. Short-term lease, a lease that commencement date or the commencement date has a lease term of 12 months or less. Lease that contains purchase option is not a short-term lease. So short-term lease, long-term lease, more than 12 months, long-term, less than 12 months, short-term. But in this less than 12 months also, but it's the obligation to purchase is not. So it's a 8 months lease, but at the end of the 8 month, you has a right to purchase the asset. Then it is not a short-term lease. Okay. Lease incentive, a payment made by the leaser to leasee associated with the lease, or the reimbursement or assumption of the leaser of the cost of the lease. So, if you take the lease and you make the payment of 12 months in starting, I will give you 13 months of lease period or 15 month of lease period of this asset. If such kind of offer is given to the leasee who gets the consideration to be there, but if you take 15 vehicles as a lease, I will give you at bulk you take, I will give you usual customer 12 months. Now I will give you 13 months, 14 months, 15 months lease period. It's a package. It's an incentive. Or I will give you a subsidized rate of lease payment. I will receive for this. Such kind of considerations incentive. Lease payment. A payment made by the leasee to the leaser related to the right to use and the underlying asset during the lease payment comprising the following. So some consideration is involved for the right to use of the asset of this lease payment. Fixed payment including substance fixed payment less as a lease incentive. So every month this amount will be paid. Variable lease payment that depends on the index or rate. So on hours of use of this asset, you will pay this much. If you use more hours, more payment. Less hours, less payment. The excise price of purchase option, if the lease is reasonable, certain to excise that right. You you will have to pay this much money if you are have to purchase it. If you are not going to purchase it, the payment is different. Payment of penalties for terminating the lease if the leasee term reflects a lease excising an option to terminate the lease. Sir, You need to get this asset as a lease for 12 months. If you want to terminate the lease in the fifth or sixth month, you need to pay this much amount as penalty to close this lease. Unless and until you want to continue for 12 months, this is payment this much. That if you get the penalty also, that is also considered as lease payment. There is no other separate penalty and all. Finance lease, operation lease. What is financial lease? A lease that transfers substantial of all the risk and reward incident to ownership of underlying asset. So, to understand the financial lease, you should understand the operation lease. Lease that does not transfer substantial of all the risk and reward incidental to the ownership of underlying asset. In the financial lease, asset will be transferred to you. If any problem happen to the asset, you are responsible. Even the asset is destroyed, you are responsible. I am not responsible. In the case of operation lease, I will pay the insurance. I am the owner. You are just using the asset for some part of. If anything happened to the asset, I am responsible, not you. You can use the asset as per my conditions, and you need to make a payment to it. That's it. This is operation lease. This is finance lease. Identifying the lease. The inception of the contract entity shall assess whether the contract is or contain a lease. So the contract is a lease or not. First, we need to find that. Second, what the contract is or contains a lease if the contract conveys a right to control the use of identified asset for the period of time in the exchange of consideration. To consider whether the financial lease or operational lease, you need to identify. Second, for the contract that contains a lease, entity shall account for each lease component within the contract or lease separately from non-lease component of the contract. So, what are the contents in the contract? What is a lease content? What is a non-lease content? Should be segregated. Unless the entity applies a practically expedient within, the lease may elect or by class of underlying asset. So it may classify the asset as a whole or not a separate non-lease component for a lease component. So lease component, non-lease component, two things. Instead of account for each lease component or any associated with non-lease component, a single lease component. So it should consider the lease component, non-single lease component, a single lease component. That is the thing. But the contract contain a lease component, one or more additional lease or a lease component. So the lease component can be one or more additional lease. Example, Um, a component example, we are having an car as a lease basis. Now, thing is, the car is for lease, but the driver, which is not on lease, the driver will be changing. Okay, that's expense. The car is not doesn't come with the driver. The driver is expenses. The car cost, the petrol is expenses. The lease payment, one lease. Such a way you should consider. A lease shall allocate the consideration in the contract of each lease component on the basis of a relative standalone price for the lease component and the aggregate standalone price for non-lease component. So for the lease, what is the price? And for non-lease, what is the price? So you should identify both the price before doing the contract. That's very much important. For a contract that contains a lease component, one or more additional lease or non-lease component. What is this? Leaser shall allocate the consideration in the contract by applying guidance note Ind AS 115. As per the guidance note, they can apply. Second one, leasing account. How to lease the accounting. The commencement date, the lease shall recognize the right to use of asset and measured at cost. At cost, it be measured and mainly it should be right to use. So we can find it is an operation lease or a finance lease. That's the main question. The lease liability measured at the present value of lease payment, always present value. So future payment should be considered to present value. Then only lease should be considered. Now, what is that is not paid on the date? Discounting containing interest rate implicit on the lease. If the rate can be readily determined, then the rate cannot be readily determined. The lease shall use the lease's incremental borrowing rate. So usually this lease we are creating the present value now how we should rate. So the rate should be definitely we can find. Often if not able to find, we can based upon our operation effectiveness. If not, na, we what is a borrowing rate? That is a SBI borrowing rate that should be used. Cost is equal to lease liability plus lease payment made at or before the commencement date minus lease incentive received at or before the commencement date plus initial direct cost plus estimated dismantling and restoration cost. These all should be the cost to be there. What lease liability? What are the lease payment? And lease payment made lease liabilities. If I have, I would like to if of getting this lease, I need the documentation charges, drafting charges as a lease liability. Example, lease payment, monthly payment. A lease incentive of getting the lease, you will get a benefit that is an initial direct cost. To get this lease, some cost will be there. Transportation, fuel, that is also to be added. Estimated dismantling. After the completing, dismantling may happen and restoration may happen in some time. That is also be included in the cost to calculating the present value of lease. Lease payment. The fixed payment including in substance fixed lease payment. Monthly, what is the payment? Lease incentive receivable. You should subtract. Every month there is a lease incentive, we can subtract it. Variable payment that depends on the index or a rate initially measured using the index or rate at the commencement date. So commencement date, we will say, sir, we're going to use this asset for this many hours a day. So this must maybe the lease payment for a month that need to be considered. And based upon that consideration on the first day, we should consider the lease payment. Amount expected to be payable by the lessee under the residual value guarantees. Any guarantees given, you need to pay that. That also need to add. Excising price of purchase option. If the reasonable certain to be excised. If the purchase option is going to be excised, that is also considered as a lease payment. Penalties for determination. I'm going to I think I'm getting the lease for 1 year, but I probably 90% sure I will close that lease by the month of seventh month. So this may be my lease liability. So I'm going to incur that. That is also if reasonable and that are going to terminate, na, then it is also be considered as a lease payment penalty. So this included in lease payment. In substance, fixed lease payments are payment that may in a form containing variable, but that in substance are unavoidable. So what is variable, what is avoidable, that you all need to be considered. Subsequent measurement. What is subsequent measurement? Subsequently, right of use of asset shall be measured by applying cost model or revaluation model. So have a right of use. How this right of use can be calculated is cost method. I bought this, this is the cost. Revaluation model. So this is the asset I have, but the current value is this much. As I'm revaluing this asset to the current market price. That is revaluation model. Underlying asset belonging to the asset class of assets to which entity applies revaluation model as per Ind AS 116. Property, plant, equipment. So this is the other thing. Subsequent measurement cost model. What is subsequent measurement? A lease shall measure a right to use asset at cost less accumulated depreciation or any accumulated impairment loss. So usually find in the cost model, right to use cost less depreciation. So it is the asset. So the asset may be depreciated. Na? That depreciation also be reduced from the cost. So this is being set here. Any accumulated impairment loss. And that is also be, so this may be the cost. This will be the damages. Reduce that so that the value of the lease payment can be calculated appropriately correct. Lease adjusted the carrying amount of a right to use asset for a remeasurement of lease liability unless the carrying amount has reduced to zero. If this all been calculated and the carrying amount to zero, then there is need remeasured the value to be remeasured because the carrying amount has become zero. If not, its carrying amount became zero, it is considered as a lease liability. If the carrying amount is not zero, it's more than zero, then it's a lease liability. Okay. Subsequent measurement of lease liability. What do you going to subsequent measure? Now, after taking the lease. After initial recognition, lease liability is measured at amortized cost using effective interest method and remeasure the carrying amount to reflect any reassessment on lease modification or to reflect revise in substance or fixed lease payment. So sometimes the lease agreement may change, price may change. If that been changed or the asset is being amortized in a rate which if in the fixed the initial state was different and but usage was totally different, so it is going to be state depreciation going to change. Then these all the things to be considered and effective rate. An example, interest has reduced right now. RBI has reduced the interest rate. So now as per the RBI rate, we need to there are the present value of lease totally will be varied. We need to consider that too in considering this lease liability. Okay. Reassessment of lease liability. What is reassessment? After the commencement date, lease shall remeasure the lease liability in accordance with the standard. As per the standard, they can remeasure it using revised discount rate or unchanged discount rate as well. I am using the same discount rate, no problem. Sometimes the rate has changed, the market rate is changed. I am changing as per the market rate, no problem. To reflect the change in the lease payment, a lease shall recognize the amount of remeasurement of a lease liability as an adjustment to the right to use of asset. So this adjustment to be adjusted, remeasurement is adjusted to the right to use of asset. Can be given, the effect of readjustment can be given to effect to right of use of asset. However, if the carrying amount of the right of use of asset is reduced to zero, it is below zero. That is zero. Therefore, its further reduction of measurement of lease liability, the lease shall recognize and remaining amount of remeasurement as profit and loss account. Sir, already I consider the lease measurement is zero. Now there is further reduction. Then the whatever I getting through it, it's profit or loss to be considered as per that going to be charged in P&L account. After the commencement date, a lease shall recognize profit and loss unless the cost is included in carrying amount or another asset applying to other applicable standard. So need to follow the standard. On the commencement date to the revised remeasurement date, is there a different and below the zero, they need to be charged to P&L account. Okay. This standard, as per the applicable standard, both to be changed. What interest on lease liability that we charge in P&L, variable lease payment not included in the measurement of lease liability in the period in which event or condition that trigger those payment occurs. Sir, we have considered we are going to work for 10,000 hours. Such substantially, the work has gone to 12,000 hours. So the now variable payment has increased. Now, the difference of the right to use of asset is totally different from the actual payment. So the difference should be charged to P&L account. Sir, no, sir, that is a totally different thing. I thought for 10,000, but now I'm using only 5,000. Then there's a measurement is totally different. So in that change is also to be carried to P&L account. Lease shall account for lease modification to separate lease if the modification increase the scope of the lease by adding the right to use one or more underlying asset. So the modification is increased. Okay, now they have modified. The lease shall account for lease modification as a separate lease if both what modification increase the scope of lease by adding a right to use one or more license. So you're going to get right for what asset that is underlying asset. So that going to increase the lease liability at the same time responsibility. So then you should modify the separate lease, consider as a separate lease. Same time, the consideration of the lease increase the amount commensurate with the standalone price for the increase in scope and any appropriate adjustment of the standalone price to reflect the circumstances of particular contract. So if that the case, the price has increased. What the price has increased, then what happens? Standalone price has been increased. Then same time, two or more asset is underlying with me. I has a right to use the asset. So then also the lease modification is a separate lease. You should consider separate lease and don't need to collapse with the already existing lease account. Create a separate lease. No, show on a separate lease ledger. No issue. Where a lease modification is not accounted for a separate lease at the effective date of lease modification, lease shall allocate the consideration in a modification contract. So they can consideration what we have paid to be allocated to modified contract we can do. Determine the lease term of modified lease. What is a modified lease? So payment is different, na, period also different or not to be considered. Remeasure the lease liability by discounting the revised lease payment using revised discount rate. Lease shall account for the remeasurement of lease liability. So when that is a modification in contract, what is a new payment? What is the effective rate of effective discount rate also to be considered? That revised effective discount rate to be applied to get the lease liability. Okay, decreasing in the carrying amount of right to use of asset to reflect the partial or full termination of lease for a lease modification that decrease the scope of the lease. So sometimes there will be decrease in carrying amount. Why? Due to the partially or full time lease. So I want to close it soon. After modification, he said, "Skew the asset by 6 months rather than 8 months as per the contract." So our liability has decreased. The lease shall recognize profit and loss and gain or loss relating to the partial or full termination of lease. Sometimes the contract will be modified, stating that, "Sir, you have paid this much. You has be your, but you need to increase your payment. Then the amount what I pay full on partially or full termination before this contract. Any problem, right? That will also be reflected in P&L account, making corresponding adjustment to right to use of asset for all other leased modification. If any modification is happening, then for the right of use of asset, then all this modification to be taken into consideration. Okay. Lease shall either present in the balance sheet or disclose in the note. So the short-term leases are always disclosed in the notes. They won't be shown in the balance sheet. But all other lease should be shown in the balance sheet specifically. Right to use of asset separately under other asset. Other asset, there's a clause called right to use of asset to become. If the lease does not a present right to use of asset separately in balance sheet, lease is shall. So I am not showing separately. Now what should I do? Including right of use of asset within the same line item as if within the corresponding underlying asset would be presented if they were owned. So, right of use of asset that should be corresponding underlying asset should be there. At the same time, it should be owned by them. Second, disclose the line item in the balance sheet, including whose right of use. And in the balance sheet, it will discuss those right of assets. What are the right of use of assets that we has, how many period, it's financial, operating, it's everything to be said. The lease liability separately from other liability. So lease liability should be separate, other liability should be separate. If the leasee does not present liability separately in the balance sheet, the leasee shall disclose the line item in the balance sheet, including those liability. If they not shown the other liability and lease liability separately, if they have not done that, but they need to disclose. So this is the liability respect to lease. This is the liability respect to other liability that need to be disclosed. If other requirement does not apply to right of use of asset, then that meets the definition of investment property, which shall be presented in the balance sheet as investment property. If some asset we have, but that is not applicable to right of use of asset or lease liability, but it's kind of a payment. Then you should consider as an investment property rather than right to use of asset. In the statement of profit and loss account, a lease shall present interest expense on the lease liability separately from the depreciation charged for the right of use of asset. So in the P&L, depreciation should be charged separately. Lease liability as an interest expense should be charged separately. And the payment should be charged separately. So three things to be charged. Interest, payments, depreciation, separately should be charged. Leases accounting, the person giving leasing. Lisa shall classify each of the lease as their operation lease or financial lease based upon. So operating lease na they have transferred the right of use of asset, but finance lease na no. No. Operating lease na they have not transferred. Finance lease na they have transferred. Okay. The lease is classified as finance lease. The transfer substantially all the risk and rewards incidental to ownership of the underlying asset. So the ownership has been transferred in the finance lease. The leasee is classified as operation lease if does not transfer substantially all the risk and rewards incidental to owner of an underlying asset. If it's operation lease, they have not transferred. The sublease transaction, the intermediate leaser accounts for the head lease and sublease in two separate contracts. So I have got the lease, then I'm subleasing to someone. So that I'm a leaser as well as leasee. So leaser should be separately shown, leasee should be separately shown. An intermediate leaser classifies a sublease with reference to right of use of asset arising from head lease. So they need to show as head of lease, then after revenue also to be considered. At the commencement date, leaser shall recognize asset held under the finance lease in its balance sheet and present them as a receivable in the amount equal to net investment in lease. So in the case, I'm giving as a financial lease. So what is the to do? This amount is receivable from this party, and I should be consider what is the amount receivable net investment. What is the amount that it should be shown in the receivable column should be said. But because two things. So I am bought an asset that is an investment because I sold to lease. At the same time, I have a receivable. Yeah, asset has been sold. So this investment should be made as a receivable from this party every month. This month is receivable, so asset will decrease substantially, receivable will increase substantially, then it will decrease when the cash is received. So these are the three things need to be considered. In the commencement date, manufacturer or dealer lease shall recognize all the following of the each of the financial lease: the revenue being fair value of underlying asset, revenue being fair value of underlying asset, or lower the present value of lease payment, accruing the lease, discounting using the market rate of interest. So, what is the fair value that should be considered? Or if lower the present value of the lease payment, accruing the lease, sir. Discounting using market rate, sir. I don't want fair value, sir. I want discount. What present value of all the lease payments in based upon the market interest rate? Okay, you can show. The cost of sale being a cost and carrying amount is different. And the underlying asset less the present value of unguaranteed residual value. So what is this cost? What is the present value? What is the unguaranteed residue? Everything to be considered. Selling profit or loss being difference price, revenue and cost of sale. According to the policy of outright sale to which the NDA is 115 applies. A manufacturer or dealer leaser shall recognize selling profit or selling loss or a finance lease at the commencement date, regardless of whether the leaser transfers underlying asset as described in days 1 and 5. What I'm saying. So of this selling, I get profit or loss. Difference of the revenue and cost of sale. That is based upon this. Okay. In accordance with the policy of outright sale as by Ind AS 115 applies. We are applying Ind AS 115 correctly. Very good. The manufacturer or dealer of leaser shall recognize selling profit or loss at a finance lease at a commencement date. So when I commence the lease itself, I should say this is profit or this is loss. That should be charged to P&L account on the commencement date itself, regardless of whether leaseor transfer the underlying asset. So even though I want to give the example. So I am a company that is Tata Motors. What I'm doing, a person is coming and says I need asset. Okay, what is this asset financially? So what you are going to do, sir? I going to make you payment of monthly this much amount to you. Okay, then after what is going to happen at the end of this many years later? So this is the first payment I'm making. Okay, this is the monthly EMI going to pay. Okay. So now what Tata should do? Tata should they sold the asset. The stock in trade became lease. Yeah. And it is financial lease because even though the asset is being transferred, but the full right is not being transferred. The Tata hold the charge, the lien over the asset until he make the final EMI. Right? Yes. Until he make the final EMI, he hold the lien over the asset. So from its dark in trade, it's going to lease. Yeah, like an investment, and it goes to receivable. So how the receivable is going to consider? So total payment what he going to receive in the future payments that in present value in the market rate, and what is the today's selling cost. I'm going to compare both. Of seeing this, you're going to say, so this is profit or loss in the come on that transfer of asset as well. You should book that. Then after only going for profit should book on the first stage. Subsequently, leasers and financial lease shall recognize finance income over the lease term based on the pattern reflecting constant periodic rate of return on leases, net investment on lease. Sometimes the trade pay change as per the change in rate also they should subsequently change the revenue based on the income. Leases shall recognize lease payment for operation lease as a income on either a straight line basis or other systematic basis. Straight line basis na monthly same same amount is going to got as a lease payment. No, okay, systematic na based upon the usage you're going to get na as per systematic. The leaser shall apply other systematic basis if the basis is more representative as a pattern which benefit from the use of underlying asset diminishes. The use of underlying asset diminishes na different pattern should be used because he has the right to use, not the leaser shall present underlying asset subject to operating lease in a balance sheet according with the nature of underlying asset. What is underlying asset based upon the nature, it will be charged in the balance sheet. So lease payment, what should be considered? Fixed payment every month, fixed payment minus lease incentive. I'm going to give some lease incentive that's subtracted. For them added back subtracted. And variable payment depends on the index or rate initially measured using the index or rate at the commencement date. That should be added. Residual value generated provided by the leaser by the leasee. That should be added. Excise price for purchase option to be added. Penalties for termination. If you think he will do and you are realistic over that, you can add it. Gross investment in lease is equal to lease payment plus unguaranteed residual value. Sir, this is the total lease payment I will get. At the end of this lease period, my asset will be this much residual value. That both will be considered as gross investment in lease. Net investment in lease is equal to gross investment in the lease discount interest rate implicit in lease. So this is the gross investment. So today I am discounting this to this rate and this is my net investment. Sale and lease back transaction. Determine whether the transfer of asset is sale of asset as per the requirement of Ind AS 155. So I have assets, sir. I have a car. But thing is that car I want to use it personally. So one thing you'll do, I will sell the asset to you. So you give me a payment of this much. Okay, then after monthly I will pay you some amount. The car is yours, but I will use it. For that, I will make you monthly this much rupees payment. I need this car. This is sale and leaseback transaction. Where the transfer asset is sale, transfer asset is not sale. The transaction is accounted for sale and lease by both the leasee and leaser. Yeah, he will account for sale. Then he will so he'll become leasee. Here he will purchase the asset. Then he will lease back. So both will account for both. Seller leasee. Measure the right of use of asset at proportion of previous carrying amount at the asset relating to right of use of asset retained by seller's lease. Okay. Recognize any amount of gain or any amount of loss relating to right transferred by buyer's leaser. In the buyer's leaser what? Account of purchase of asset. I'm purchasing asset, applying applicable asset. Okay. Then Accounting for lease, applicable leaser accounting recommendation is 116 because he is leasing back. Correct. Here, transfer asset is not sale. Transaction will be accounted for financial arrangement for both a lease, seller leasee and buyer leaser. Seller leasee continue to be recognized as transferred asset. Okay. Recognize financial liability equal to transfer proceeding in the AS 115. Here is not sell, just he is leasing back, but it is based on every month payment. Buyer leaser not recognize transfer of because the asset is not transfer. Recognize financial asset equal to transfer proceeding applied to India's one. So on make it will be considered as asset every month, but but it will not be considered as expenses. It will be considered asset because he is not completely got the asset. He is going getting step by step. So what are the disclosure need to go? The lessee shall disclose the following amount of the reporting period. What are depreciation charge, right of use of asset by class of underlying asset. So this is the depreciation for the lease. Interest expenses on lease liability, the total amount I paid, and this is the principal, this is the interest, separating it. Expense relating to short-term lease. The expense need not to be include expense relating to lease with short-term lease 1 month or less. So sometimes a lease for 1 to 3 months only. So it is the right asset is not transferred to me. So it is directly charged to P&L rather than considering interest, income, or everything. Expense relating to lease of low value asset. Low value asset and all directly complete expense. Though this is a low value asset we leased and that is charged and the expenses we need to disclose it. The expense shall not include expense relating to short-term lease of a low-value asset, including paragraph 53(3). Does not include that. Expense relating to variable lease payment, not including measurement of lease liability. So sometimes there may be variation on the lease payment. Whatever we actually measured may be changed due to the more use of asset. Then that will be charged to P&L. You should mention that why that has been charged to P&L. Income from subleasing right of use of asset. We got a lease and we subleased it. What is the income arising out of it? You should say this is a subleased income. Total cash outflow of the lease. This is the total cash flow income. Addition to right of use of asset. What are the new asset that is being put into right of use of asset? Gain or loss arising from sale and leaseback transaction. Sometimes we sold the asset due to financial constraints, lease back it. So through this transaction, whether we get profit or loss, we need to mention. Carrying amount of asset at the end of the reporting period on the class of underlying asset. So this is a finance lease. So this is the total carrying amount of this. Need to mention. Leaser shall disclose the following amount on the reporting period. Leaser, what he need to do? Financial leases. Profit on selling profit and loss. So on this investment, I am selling to receivable. On this transaction, this is my profit. Finance income as a net investment in this lease. So this doing my transaction, I have this much revenue. Income relating to receivable variable lease not included in the measurement and the net investment of the lease. So I thought so my lessee will use the asset for this many hours, but he had used for this many hours. So there is a increase in change in revenue in this month that is reflected in the P&L account. You need to measure. For operating lease, a lease income separately disclosing income relating to variable lease payment and that do not depends on the income rate. Change in the income rate, there is some disclosure to what is a variable payment, why there is variable payment, everything need to be disclosed. Then laser shall provide qualitative and quantitative explanation for a significant change in the carrying amount of a net investment and financial lease. In financial lease, how many units I have leased and what is the current value of lease that been shown correctly. Laser shall that is quantitative and qualitative. Laser shall disclose a maturity analysis of the lease payment receivable showing undiscontinued lease payment to be received on an annual basis for a minimum of each first 5 years, and the total of the amount for the remaining years. For the first 5 years, what is the maturity basis, how much money we will receive, what will be the undiscounted lease payment, and what will be the discounted lease payment for the first 5 years. We will disclose it separately. Lessor shall reconcile that undiscounted lease payment to net investment in the lease. This undiscounted should be considered as a net investment. Transaction date accounting. What is the definition of lease? On the date of initial payment of Ind AS 115/16, companies have an option not to reassess the previously identified lease. On the first year, initial date, they should not reassess the previously identified contracts. Okay, and apply the transaction provision of the standard to the lease, and not to apply a transition provision to the standard to this lease which had an option not to reassess it. Also, they had option not to apply a standard to contract which is not previously identified as containing lease in the 17. As per India 17, if it is not been applying the standard, then it should not be identified. If the entity choose to above option, then it shall disclose the fact, apply the practical expedient for the contract. If they have done this too, they need to explain it in their disclosure. Transition accounting in the books of account. Lessee permitted to adopt the standard retrospectively. When they adopt this in the years, retrospectively they need to adopt following modified retrospective approach. Sometimes they can permitted to modify the approach up to this time, and from this period 2017 we are doing another thing. Such a way they can also do. Leasing applies to election consistently of all the lease, it should be followed consistently.